top three things this morning. Number one, Japan. Number two, Spain. And number three, the U.S. 10-year bond yield. So number one on Japan, the market's trading obviously on what the currency does. So again, to review what the Japanese are trying to do, they're trying to burn their currency, and by doing so, reflate the equity market and inject some inflation into a country that hasn't had anything but deflation for a very long time. So in other words, when you see the dollar bounce, which the dollar just did for a day and a half, you're going to see the yen go down on that and Japanese stocks go up. The problem with this, of course, is that the Nikkei did not get above its medium-term trade line resistance. So that's problem number one. Problem number two is the yen versus the dollar basically holding its level of support. So again, into Ben Bernanke, chasing Japan would not be what I'd be advising you to do here. Number two, on our global macro theme called Euro Bulls, you just got to love this. Even Spain looks better than the U.S. at this point because, of course, the Spaniards have a strong currency now. The Spaniards having the euro in particular as their currency. The euro continues to be strong, and the way that our model flows, you get strong currency, you deflate the inflation. So, of course, you could see that this morning in the October reading for consumer price inflation in Spain actually went negative. Again, negative inflation, negative 0.1, but it's not up, and that's a very good thing. Again, what we like is a strong currency, deflating the inflation, and real inflation-adjusted economic growth, which, of course, Spain is getting a little bit of, which is a little bit better than having what they had, which was something closer to the end of the world. Looking at 10-year bond yields, Bernanke is poised to impose upon you from today and hereafter a down dollar and rate repression. So what do you do with that? You definitely don't short bonds. The 10-year bond yield can go to 2.4%, irrespective of what Mr. Fink has to say, or any of the buddies that they have that advise them for their own economic benefit. And did I just say that? Yeah, I think I did. 2.4%, again, is support. Don't want to touch that with a 10-foot pole on the short side. Rates rising is over until we get the spine in this country to taper, and I'll leave it at that. So those are your top three things.